stock market has offered higher returns historically than other types of investments like bonds or savings accounts. It can be a really powerful tool for building wealth. However, it is important to approach stock investing with a sound strategy and a long-term mindset, as there is always a level of risk involved. Today we discuss the basic aspects of the stock market for beginner investors. So, let's dive right in. The stock market is a platform where people can buy and sell shares of publicly traded companies. It provides a way for businesses to raise capital by selling shares to investors, and for investors to earn a return on their investment by buying and selling those shares. The origins of the stock market can be traced back to the 16th century when merchants in Europe began trading debt securities issued by governments and other institutions. These early securities, known as bonds, were essentially promises to repay a loan with interest at a later date. Over time, investors began to buy and sell shares of ownership in companies. This practice originated in Amsterdam in the early 1600s, where merchants began trading shares of the Dutch East India Company. This company was one of the first to issue shares of stock to the public, allowing individuals to buy a piece of the company and share in its profits. As trading in shares of stock became more popular, stock exchanges were established in cities around the world, including London, Paris and New York. These exchanges provided a central location for buyers and sellers to come together and trade shares of stock in a standardized and regulated way. Nowadays, the stock market has evolved into a complex system of exchanges, brokers, and investors, with trillions of dollars in trades taking place every day. While the technology and methods of trading have changed, the underlying principles of buying and selling ownership in companies remain the same. Today, the largest stock markets in the world by market capitalization are New York Stock Exchange, Nasdaq, Tokyo Stock Exchange, Shanghai Stock Exchange, Hong Kong Stock Exchange, London Stock Exchange, India National Stock Exchange, Toronto Stock Exchange, Copenhagen Stock Exchange, Frankfurt Stock Exchange, South Korea Stock Exchange, Euronext Paris Exchange, and Australia Securities Exchange. A stock, also known as a share or equity, is a unit of ownership in a company. When a company goes public, it issues shares to the public in exchange for capital. Shareholders have the right to vote on certain company matters, such as the election of board members, and they are entitled to a portion of the company's profits in the form of dividends. Shareholders can also sell their shares to other investors in the stock market. Companies issue shares as a way to raise capital for growth and expansion. By selling shares to the public, companies can access a large pool of capital that they can use to invest in new projects, hire more employees, or expand into new markets. Additionally, by going public, companies can increase their visibility and credibility, which can attract new customers and business partners. Share prices are determined by supply and demand in the stock market. When there are more buyers than sellers, the price of the stock goes up, and when there are more sellers than buyers, the price goes down. The stock price can also be influenced by a variety of external factors, such as economic news, company earnings reports, and political events. A stock market index is a measure of the performance of a group of stocks in the market. It is often used as a benchmark for how well the overall market is doing. The most well-known indices in the United States include the S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite. Now that we've covered the basics of what the stock market is and how it works, let's talk about how people make money in the stock market. One way to make money in the stock market is by buying stocks that increase in value over time. This is known as capital gains. For example, if you purchase a stock for $60 and it goes up to $100, you've made a capital gain of $40. Another way to make money in the stock market is through receiving dividends. Dividends are payments made by companies to their shareholders. The amount of dividend paid to each shareholder is usually a portion of the company's profits. Dividend-paying stocks are often attractive to investors looking for a source of regular income. Now, let's talk about the risks associated with investing in the stock market. As we mentioned earlier, the stock market is inherently volatile and subject to fluctuations. One of the biggest risks is the possibility of losing money in the stock market. This can happen when the value of your stocks goes down and you sell them at a loss. It's important to remember that investing in the stock market involves risk and that past performance is not a guarantee of future results. However, there are ways to manage risk when investing in the stock market. One strategy is to diversify your portfolio. This means investing in a variety of different stocks from different companies and industries. Diversification can help reduce the impact of any one stock or industry performing poorly. Another way to manage risk is to invest for the long term. The stock market tends to be volatile in the short term, but over longer periods of time, it has historically provided positive returns. By staying invested for the long term, you can ride out short-term fluctuations in the market. It's also important to have a solid understanding of the companies you are investing in. This includes researching their financial statements, management teams, and industry trends. By doing your due diligence and investing in companies with strong fundamentals, you can increase your chances of making successful investments. In conclusion, the stock market can be a powerful tool for building wealth over the long term, but it's important to approach it with a clear understanding of how it works and the risks involved. If you liked this basic intro to the stock market, please like this video and subscribe to the channel to learn more about finance, business, and the economy in general.